Hello guys. So in this clip, you're going to be looking at the approach you should take when you're using this strategy. Okay. So the first thing you need is you need to look at the news. This is immediately the London market opens, the London session opens. You need to go on and look at uh the the news of that day. Okay. So that should always be the first thing you do in that specific day. Figure out what currencies you're expecting to have some specific news: high volatility, low volatility, medium volatility. Okay, so you want to pay more attention on the high volatility or the high impact news of the day. Okay, so you need to also note down the times they're going to occur. So you want to avoid specific currencies within specific time frames, okay, or within specific times. Okay, so yes, the next thing you go to your MT4. Okay, so on your MT4, it's a very simple process actually. You want to run down, you want to check all the currencies within 30 seconds and try and find the best possible entries based on the momentum based strategy. Okay, you want to look at currencies that look like they're about to bounce from the 20 EMA and the 50 EMA. Okay, same case. Keep in mind, I'm recording this clip at night, so it's not the best possible scenario for us to take any trades, but you're going to find some comfortable positions you can actually try and see what I'm trying to say. But you should never take your trades at night. It's not advisable. Okay. So what you do is you come to the market watch, just drag and drop on any currency, all the currencies. You want to take at least 30 minutes, 30 seconds on each currency pair. Okay. So 30 seconds at most. If you're not comfortable with any position, with a position with this entry, okay. If you're not comfortable, if the market has been choppy, you want to avoid it. So 30 seconds at most with any currency. So we have this. This is a good trade. As always, you need to have a notebook. You need to always have a notebook. So I'm going to note down GBP USD. So GBP USD for a short position. So GBP USD short, okay, you could write that. So you don't want to take the trade immediately. You want to wait. You want to first of all look through all the currencies before you take any decisions, you make any decisions. Okay. So the USD buy, okay, or long position. Okay, because you're expecting probably it's going to bounce from this 20 EMA for a long position. Okay. So we can also note this down, but the market is a bit choppy, but yes. So we could also go for New Zealand USD. Okay. So on to the next one. Just D chef. You have this cross, but the market has been a bit messy. You can see this violation, then this. So I'm not really comfortable with taking this position, but we could go for a long position. Okay. So 30 seconds. So we could go for a long position from this point to around the 200 EMA, not the best, but we could write it down. Okay. USD, chef, long. Okay. So you want to write down any currency that you think is going to actually pay. Okay. Any currency that looks promising. Okay. So I won't write everything down. I'm just trying to show you guys what you're supposed to do. Okay. So we have this currency. We can look at this because it's not a USD based currency. So euro, Australian dollar, for a short position. So I hope you understand where I'm saying for a short position. You can see how the prices are bouncing from the 20 EMA. Okay, so we can look at this for a possible short position. Okay, not the best because of this violation. Price is already at the 200 EMA. So unless we see this price breaking this point, okay. So for me to take a position on this currency, I want it to break this point, the 200 EMA, form a new high, retrace to the 20 EMA, okay. Then that is when I'll be looking for that position to form another swing, another higher swing, okay. So that is when I'll be able to take that trade, but right now it's not the best position, okay. So I'm going to avoid this for now, but you could write it in your watch list for a long-term trade, okay. But you have this. So let's go to the GBP pair. Is it something we can trade? Yes, we have a trend, we have a downtrend. Not the best because of these violations, okay? But we still have the prices bouncing from this point. So we can wait for this price action to see what price action is going to do from this point, okay? So yes, there is a cross of these two. So it's not the best position to take a short, but this is something we can put in our watch list, okay? Then we can go for GBP, JPY. We're waiting for this bounce, but it's not yet. As I said, mostly you'll find these markets pulling back at night, okay? So we have this Australian, New Zealand dollar. So we have this for a buy position, okay? Okay, so let's deal with that for now, okay? So that is the first step. You want to go through all your charts. You want to determine which ones you're comfortable trading, what you're looking at, what you're expecting from these currencies, okay? Then guys, there's a reason we're not taking most of these positions immediately, okay? There's a process to it, there's an approach to it. So the second thing you do, once you're done writing down your watch list, once you've noted down the currencies you want to trade, is you want to go to your analysis, to your MT5, okay? You want to go to your MT5. So the first currency we're going to look at is the GBP USD. So based on this, based on the analysis I have, I can expect the market probably is going to move to a lower point after it has formed, probably another higher point, then to a lower point. So when you go back to your chart, your strategy, are you comfortable with this short position? No, because you're expecting the market is probably going to make a higher point before the sell, okay? So you want to go for a short position, not the long. So we are not going to really take a position here. So I'm going to cross it off from my watch list, okay? So the next thing, I'm going to go to Australian USD, okay? So we're expecting a long position from this. This is the 1 hour chart. So let's go to our analysis, okay? So what do we expect? Do we expect a long position? Yes, there's a big possibility of a long position. So the approach I'm going to take with this currency is I want it to break. I want the currency pair to break this point before going for a long. So I want it to break this point first for me to be able to know that it's going to form a higher high, okay? So I can approach it with a pending order right now, or I can move it to I can put a tick on it and watch it as time goes, okay? So we have our first currency pair. Okay, so let's just take a position based on that. So I'll be watching the prices to move above this point. Okay, so for my stop loss, I'll go with the stop loss below them, the EMAs. Okay, the 20 EMA, that's around 45 pips. That's a lot though, but okay, it's just an example. I would not take, okay, but anyway, yeah. So for example, so that is what you want to do. Then you want to go to new order. Okay, then determine the volume based on your trading balance. Then you want to go to the type of trade. So pending order, you're going to go with a buy stop at what price? At 0.7725. Okay, and the stop loss at around 0.75, 0.75250. Okay, then you place that position. Okay, so there you have it. It's a bit of a crazy position because I did not really go after them. The correct lot size for me to risk 2% of this position. Okay, so that is it. For me to determine the take profit, there are a few ways to do it. You can go with the daily, so we can have this as the take profit around this point. Okay, around how many pips? Around 500 pips each. But yeah, we could have that, or we could have this point around here. Okay, but the best approach so that you don't limit yourself is always to approach the market with a trailing stop. Once the trade is active, once the trade is moving, just follow the trailing stop based on the ATR 8 on the 1 hour. You could have your trailing stop at around 10 pips if this trade was active and running 50 pips, or immediately after the trade is active, 20 pips, move the stop loss to the entry and let it run. Not safe, because you could have 30 pips that you could be banking, 50 pips, then the market all of a sudden there's some sort of volatility and it catches you out against your trade. Okay, so yeah, so that is how to take a trade based on this strategy. Okay, so we have one position. Then we can go on to the next, New Zealand USD. We have a buy position, but already I'm uncomfortable with the trade because of it's a bit of a sideways market. I don't see a specific trend from the recent future. Okay, from the past few days, probably, yeah. We don't have any specific trend in the market, so I'm going to avoid this. Okay, but I'm going to watch this position. Okay, I won't take a direct market order, but if I'm going to see the 20 EMA moving and the market moving, so I want to see the market testing that 20 EMA once it's broken this point. Then I can think about looking for a position for a long. Okay, but right now I'm not comfortable with the position, so I'm going to cancel that position. Okay, then we go on to the USD chef. So we're expecting a buy position from this. So the other thing you guys need to understand is you can draw your trend lines, you can draw your supports and resistance even in this chart, the momentum strategy chart, but you need to keep it very simple. Okay, you want a clean chart. You don't want to have a messy chart that you cannot really follow up on all the currencies. Okay, so we have that point. So for this, for me to take this position, I want this market to bounce from that point. So I'll be looking for the second touch of the 20 EMA for me to set a pending position. Okay. So I'll be looking for this. Okay. When we go to our analysis, do we have something that we can use there? Okay, I'll get really updated this chart. Okay. But yeah, so we have something I'm trying to just fix right now. So we could say that then our target is going to be around here if we see that happening. Okay. So yeah, but long term it's a downtrend, so we need to be careful because you're going against the trend. So if possible, try avoid going against the trend. But when the position is good, you can always find a way to take it, but carefully. Okay. So that's why I'll be very patient with it. I want to see the second touch before I go for that position. Okay. So we could have this as the 20 EMA as the daily target, as the target. Okay. So also going to play along with this support that will become the resistance. Okay. Yeah. So we have that. Now on to the next one. So on to the next currency in our market watch. So always you want to go for the 1 hour, you don't want anything else. 4 hours sometimes, but 1 hour is the most important. So on to our MT5. It's a bit of a process, but once you get used to it, it's so long as it's paying really well, and with time it becomes very simple. Then the other thing you guys need to do is you need to make this strategy personal. You want to personalize this strategy. Okay. So by all means. So there are a few reasons I wouldn't be taking this trade. Okay, this is interesting. So this position is a bit risky because we want to see. So this is a bit of an interesting position, but you can expect the currency to drop to around 1.5699. Okay, so that's a possible position. Okay, but the main thing that we want to see is the market breaking below this point. Okay, but it's a good short position. It's not the worst. Okay, so we could go with so we have a trend line around. So take the weekend and just try and analyze all these currencies so that you won't have all these troubles. So we have this, we have that trend line. Then we could go with the Fibonacci extension. Okay. So we're expecting the first position to be around Fibonacci extension 61.8. Hope this is clear though. So yeah. So we could look at, So the first thing we're going to watch is we want to see the price breaking Fibonacci 61.8. Okay. Extension 61.8, then our target is going to be around Fibonacci 100, extension 100. Okay. Then probably a pull back to around this point, or it's going to pull back around this zone. Okay. But yeah, it's a good position. It's not the worst position, but if you can avoid it, just avoid it. Okay. So yeah, a bit of a risky trade, but I wanted to first of all break this point. Okay, so that is the first thing I will be looking at. Then I'm going to go for a pending short position below this point and my stop loss around uh yeah, somewhere around there. So yeah, so that's where the Steno up comes in. You need to really be careful with the risk management. You need to only risk 2% at any given time. Yeah. So we have this. So this is something we could take. Then the next one. So we're expecting this buy position. So what you're looking at is we want to see a break of this point for us to go for a long position. Okay. So sorry. So what we do, we go to our MT5. What do we have with the MT5? So yeah, I can comfortably take a long position. Yeah, I can comfortably take one. Okay, but I want to see the prices break above this point, this zone. Okay, then I'll go with the long position and a stop loss of around 20, 30 pips, depending on the most comfortable one for you. So I'll go with one around here, below this point. I'd go with a 40 pip stop loss. So yeah. So the reason we avoid taking direct market orders is we could be expecting this market to buy, right? But to avoid a short position, to avoid the market, probably the market might obey this minute trend line here. Okay, probably. But if it doesn't obey that trend line, so we want to catch the momentum. So we are going to go for the buy stop. Okay, that way we get to avoid all the noise, all the uncertainty, whatever we are not certain about is the market is not going to be active to activate that specific trade unless it's going to move to form a new high position. Okay. So yeah, keeping in mind it's the weekend, it's on a Friday. So most of this analysis on Monday wouldn't be the best to use. So you need to run through your charts. You need to do the same thing. That is immediately the London market opens. Okay, the London session opens. So once you have the London session open, just run through the charts. That's the first thing. You need to know the news events of that day. Run through the charts. Write down any currencies that you will be watching. So you want to do this after every 4 hours. Just go back to your charts, run through the market watch, the currencies, compare to your MT5 analysis. Then once you have the best possible trades, that's the only time you take them, okay? Then you also need to watch the trades that are the pending positions you have, okay? So once you notice the market is not moving or there is a consolidation, you want to cancel that position. Okay. So you could easily just cancel that position if you're not comfortable with the position. If you think the market has moved against you, if personally I see this currency breaking below the 50 EMA, then I would cancel. Okay. If you think the time has moved and the market is just consolidating, avoid it, let it be. You're going to find another position. Okay. So long as you get the best, the high accurate trades, that is what you're looking for. Okay. So yeah. Then the other thing, once your trade is active, as we said, the trade is going to, when the trade moves for 20 pips, you need to move your stop loss to the entry. Okay. The other thing, once your trade is moving around 50 pips, you want to use the ATR8 to manage that trade. Again, you remember what I said about the RSI6. It doesn't really matter whether the market is overbought or oversold. I don't believe any forex market can be overbought or oversold. Okay, you can do your research on that. So you want to look at the direction the currency, the RSI is pointing towards when the trade is about to be activated or when the trade is activated. Okay. So then to determine the lot size that you're going to use your 2% risk, you use the Steno app. Okay. First of all, you want to determine if you're going for the position. Okay. I want to go for the position above this break. Okay. So that is the first thing. So I've determined where I want to enter my trade. Okay. So then I determine the stop loss. I'll be going for, let's say, a 40 pip stop loss. Okay. So you go back to your Steno app, the currency pair that you're going to be taking the position with. The second thing you will need is the number of the pips in stop loss. Okay. And that thing that you need, stop loss, you determine your stop loss, then the currency pair, then the balance in your account of the equity. Then yeah, that's all you need. Then the amount of risk you want to take. Always advise people to use the 2% risk management, okay, at any given time. Yeah, then yeah, the question of risk to ratio, I believe it's going to limit you. There are guys who use it full time. I don't believe in risk to ratio. What if the trade was to move 100 pips? Your risk was just 20 pips. So are you going to use the 1:2, or what are you going to do? Okay. So you just believe, let it run, let the trade run, manage it. If you catch 10 pips, that's better than none. If you catch 20 pips in a day, that's a big progress. Okay. So with this strategy, you're going to catch 100 pips easy. Okay. So yeah, but risk to ratio, avoid it. Avoid using it by all means. But if you feel comfortable using it, whatever works for you. Okay. Don't limit yourself just because I'm telling you don't do this or do this. Whatever works for you, use it. Make sure you personalize this strategy. Make sure you find the best. Try and improve it. Try and find something that you're more comfortable working with than what I'm just using. Okay. So long as you're making money, you move on. Okay. So I think that will be all. Thank you guys. Thank you big time for those who stayed until the end. For any questions, you can hit me up. Yeah. If you don't understand anything, just tell me. I'll try explaining it to you. So yeah, have a good night. Yeah.